Hi, IBD. I'm Meredith Heyman. This is Industry Insights. Thanks so much for joining me. BlackRock is out with its iShares 2024 year ahead outlook. And joining me now with a look ahead at how investors should be positioned for this year is Kristy Akullian, director at BlackRock and a senior member of the iShares investment strategy team. Kristy, thank you so much for chatting.
Thanks for having me, Meredith.
All right, let's jump right into this. What is BlackRock's overall ETF outlook for 2024?
In one word, I think that we expect 2024 to be a year of normalization. So obviously we had, the pandemic years. 2022, we had an inflation and an interest rate shock. I would say that 2023 was kind of a growth shock to the upside. I think 2024 is going to look a lot more normal in terms of just the amount of economic volatility that we expect. And in line with that, I would say we don't expect an up or down, plus or minus 20% year in equities again, but we do still think that there's pockets of opportunities to be found there. And then on the ETF front in particular, we really just continue to see huge demand for the vehicle as just an important access tool in many investor portfolios. So, ETF AUM reached a new high of just above $8 trillion in the US at the end of 2023. And we expect that to continue to grow. And some of the areas where we're seeing the strongest growth in particular are places like fixed income, and then some of the alternative categories, active ETFs, some of the outcome-oriented, and some of the target date funds as well.
Now, when it comes to large cap growth, you're focused on margin resilience and stable earnings. How do those factors impact performance?
So I think that large cap and large cap growth in particular have almost become sort of synonymous, almost a byword for quality. And I think that two of those attributes that you mentioned are really important reasons why we see those continue to flourish in this environment. So on the starting backwards and working up, I think on the stability of earnings front, that's one of those quality metrics that we prefer because it shows that a company can be profitable over time and not just at a specific point within a business cycle. So it's not just a cyclical company, but it's something that's going to be able to prosper even when the economy maybe slows. And then margin resilience is another one that was really, really germane for 2023. And for some of those large cap growth names and some of the mega cap ones in particular. I think in 2023, that looked, in some instances like reductions in workforce and really just, I think, in general, cost cutting. And I think that was what was rewarded over 2023 is that those companies kind of put in the work, if you will. They protected margins and shareholders rewarded them for that. So I think that's one of the reasons why we saw something like an IWY, which is the iShares large cap growth ETF. It really outperformed the broader market last year.
Now, after a strong 2023, do you think large cap growth will continue to lead the market higher in 2024?
So there's one more quality attribute that I didn't mention yet, and that's really the strength of balance sheets. And I think that one is going to be the most important one in 2024, much like it was really important in 2023. So if you think about companies that have strong balance sheets, the important thing is that they don't need to borrow money to fund projects. And especially when interest rates are really high, we saw that be a very rewarded factor. Part of our outlook for 2024 is that we think that interest rates are going to stay a little bit higher for a little bit longer than the market currently anticipates. So we do think that those are companies that can continue to be rewarded, at least in the near term, as we work through some of that uncertainty and as we reach sort of the Fed pivot when they start to cut rates.
Now, you refer to small caps and the healthcare sector. I really like this term as lovable laggards. What do you mean by this?
Yeah, so it's catchy, right? In general, what we're looking for here is areas of the market that maybe can still have strong fundamentals. And in general, we do still like a quality tilt, even outside of large cap growth, right? But really the names that didn't participate in the 2023 rally as much. So for us, if we're looking at sort of a sector lens of the market, looks like things, like we see healthcare is in that bucket, maybe financials as well, that can both kind of benefit from a normalization in interest rates and a normalization in the yield curve. Another way to look at it is small caps, as you mentioned too. If you think beyond sector and in terms of market cap differentiation, I think that there's an opportunity for names in small caps to catch up, particularly when interest rates do start to fall. But even there, I would stress that the quality component is really important. So we favor something like IJ, which is the iShares S&P 600 small cap ETF, because index construction actually matters. Not all small cap is created equal, and they have a profitability screen that we really like. That lets us, see that there's opportunity, but without necessarily having to go to the lower quality end of the spectrum.
Hmm. And what's your take on how these categories should fit into investors' portfolios? Excuse me.
Yeah. So in a lot of ways, I think the lovable laggards are almost the next trade. So we still do like that large cap growth, those quality elements for right now, because of the uncertainty that we still face in terms of the path of interest rates and the path of growth. I think that going forward, we're going to see that baton passed from just a pure focus on inflation and interest rates and switching over to growth and making sure that the US economy is not, growing slower than we expect or even, tipping into a recession, which is not our base case. But I do think that the importance of things like the labor market and the consumer strength are really going to dictate when it's time to jump into some of those lovable laggards that we think can have a moment in 2024. It might just not be yet.
As the year gets underway, stock market conditions are strong. What do you see playing out in the overall equity market though for the year on whole? And what are the biggest catalysts to pay attention to?
Yeah, so in 2024, we've already gotten, some new all-time highs. We've gotten a few of them back to back, right? A lot of the investors that we speak to are concerned that how much juice can there still be in this equity market rally if we've already come so far. So, I think that that's a very fair question to ask, and like I mentioned, I think that growth is going to be the most determinant factor for how equity markets perform going forward. So we want to continue to see strong growth. We think it makes sense to keep quality at the core of a portfolio, but be opportunistic. I think there's going to be a lot of opportunities to choose your spots, whether that's those financials or those healthcare or small cap that we talked about over the course of 2024. It's not just going to be a straight line in either direction. I think it's really a ripe opportunity for either active management or just being a little bit more selective, even in terms of the index products that you choose. And we think that ETFs can be a great way for investors to do that.
All right, Kristy. Well, we'll be watching. Thanks so much for joining me.
Thanks for having me.
This is Industry Insights. I'm Meredith Heyman. Thanks for watching. We'll see you next time.